Good morning, everybody. Welcome back to the Opportunistic Trader. It's 10:40 a.m. and the DOE report was just released about 10 minutes ago. We're speaking now with Andy Lebow of Commodity Research Group, who's been joining us to help break down all those figures. How's it going this morning, Andy?
It's going great, Michael. Happy New Year to you and all your listeners.
Yeah, absolutely. So I saw the data came out and we were trading higher. I'm interested in your thoughts on oil here. We've had a big move. We've moved from about the 45 range above 51. But let's first talk about data. Data came out. We're trading 51.30 and now we're trading 50.70. So we're down about 1% after the data.
Well, I thought the numbers were bearish. Crude number drew by 1.7. The market was looking for a little bit more than that. We were looking for down 2.5. So actually, we were pretty close. So maybe we'll give a neutral on the crude number. But gasoline and diesel and distillates were clearly bearish. Gasoline was up 8 million barrels. After rising 7 million last week, and distillates were up by 10.6 million after increasing by 9.5 last week. So two huge increases on the product side. Curious on both, particularly on the distillate. You've had two demand weeks on distillate, which are just frankly unbelievable. They were like 2.9 and 2.9 million barrels a day and 3.2 million barrels a day. Michael, they're usually like 4 around this time of year. So something's wrong on those distillate numbers, and I'm sure we'll see pretty good draws in the weeks ahead. And gasoline too, we're just making too much gasoline. That's basically the bottom line.
Even still at this current point?
Yeah, we're making way too much gasoline. Demand is mediocre at best. Distillate too, we're making too much distillate, but it's really on the demand side that's been so weak here the last 2 weeks. Distillate I think will, as I said, will draw. Gasoline's problematic. I know the market action's been a little bit better. It's still not great relative to where distillate is and relative to crude. If you look at the cracks, it's been pretty poor. And gasoline is it's been worrisome for a while, but this number is obviously bearish for gasoline. And total stocks built by 13 million, and that's all on the product side. Obviously, if you look at day supply on total stocks, we're at 61.3 days supply. The 4-year average is 61.9 days supply. So pretty much average now on total stocks. We had been running below the 4-year average on days supply. If I took a big overview of these numbers, Michael, I'd say the 1 week is bearish. The total overview is neutral to a little bit bearish. But with the real worry being gasoline.
Yeah. So, based on, I hear a bit of an echo, but based on what we've done, we saw a significant decline in Q4. Have producers started to adjust based off of the price decline?
Possibly. It's hard to say because the price decline, it didn't last. The prices just fell off the table.
Yeah,
but producers are pretty nimble. It's possible that we'll start seeing some adjustment in Permian, and there's a lot of talk in Eagle Ford, which is in East Texas. The Permian, of course, is in West Texas. Those are two of the larger shale plays, and there is some talk of adjustments on production. But we'll see. We'll see. Right now, the EIA has they're expecting that crude production in the U.S. is going to build about 1.2 million barrels a day in 2019 versus 1.5 in 2018. But you know what, Michael? They have a horrendous track record. I went back and looked at a year ago at what they were saying, in December of 17, and they thought that crude would grow in 2018 by like 900,000 barrels a day. So they missed it by, a lot, which is, one of the reasons why the market collapsed in fourth quarter were these much higher than expected U.S. crude production numbers.
Yeah, for sure. What about, I know when we spoke last, you were talking about how you thought that this was, in the 40s, that you thought that it ran too far on the downside. Do you think, what do you think, and now looking at it, might have been the cause for the move down? Do you think it was liquidity? Do you think it was positioning, something fundamental, combination?
Well, like all things, Michael, it's certainly, you always go combo, right? Because there are a lot of factors to get the market, to get down to $42 or $42.50, whatever the low was. And I think some of that was liquidity. Was the last week of the season. You look at some of these option volumes; they were poor. The last week, plus the macro, the sky was falling all around us that week, and I'm sure that had that was a factor as well. With the move in the equity markets, seemed to have a spillover effect, I think, on oil. But I think we talked about the mismatch of price versus what the data was telling us, and and what was going to happen in first quarter with these production cuts. And you look back and you say, yeah, there was a mismatch, and I think now the market is adjusting. And some of that is the year is starting, and I think on the physical market, we're definitely seeing a pickup in demand from Asia, and buyers are back, and prices got way too low.
But it sounds like even from the data that you were talking about today, you were mentioning that you think that supply is still very high.
Well, for products, yeah, but total, if you look at total stocks. And distillate isn't. Distillate is you just had two real big builds off of very low numbers. Gasoline is the one to worry about, as I said. That supply is, that's too high. But if you look at total inventories, which is crude plus products plus NGLs, we're pretty average. We're at 61.3 days versus 61.9 days, which is. I think that's that's okay. That's where I see the neutral part of the equation. And I did go back and look at, all right, so if we're at 4-year average on, on total inventories, what is the average WTI price over the last 4 years? And, if you take the last 4 years, it's 51.70. Roughly. All right. So where's the market now?
Wow.
Right? Yeah. I mean, the market adjusted. And, if you want to talk about an equilibrium price, you could say $50 plus or minus $2, and I think the market's gotten.
Well, I think that is pretty interesting for people that have taken a really hard look at this sell-off and, think that it's really overdone. That's one interesting thing. A lot of people could also say that the rally back up, on a few-year term, it was a big move from the $40 level up to $77.
Right.
So that's pretty interesting in itself, especially in the oil market. Sometimes you get these moves that extend for a period of time.
Oh my goodness. I mean, you get them, and that's not to say, look, I think you never want to say, oh, the low is definitely in, if we go into, some a horrendous recession, or the markets unravel, certainly, as you said, Michael, we've seen $26, right, in the last decade. So it's possible that the lows aren't, and I think there's a high probability that they are. But
so what are your thoughts for this quarter, for Q1? Do you get a sense that we're going to be trading in, let's even just give it like a $5 range. Like, where do you think we're going to be trading in, a few months?
Well, I think we're going to, we may ratchet here. I'm certainly more bullish than bearish still. I think there's a chance that Q1 or maybe early Q2, I think we have a chance to get back up to $60. Some of that's going to depend on, what happens with the, the sanction waivers, where we go with that. That's going to come up in April and May, and the market's going to take a hard look at that, because there's do we think the Saudis are going to increase production again, for this administration? No, they're not. And in fact, they've pretty much indicated that they want to see higher prices, which they indicated back at the OPEC meeting, but for some reason the market, wasn't really paying that much attention to what the Saudi minister was telling us, live and, he did this press conference after the OPEC meeting where he said, we're cutting production by 800,000 barrels a day, and we think, we'd like to see prices higher. Are they going to do that? Are they going to increase production? No, I don't think so. And, we'll see what happens with U.S. production and underlying demand. But if you look at the balances, these cuts are more than they're going to be, because Canada's cutting 325,000 barrels a day, and Russia and the other non-OPEC, another 3 to 400 plus 1.2 from OPEC, what I think. You're looking at 1.8 million barrels a day, and that's going to get the market balanced and maybe even a little tight, as we head into the end of the winter. And speaking about the winter,
what would be the biggest surprise or two that nobody's expecting from the oil market?
That is the greatest question, Michael, because I'll tell you this right now. It's going to be something, as somebody that's followed the oil markets since, 1980, it's going to be something that no one is talking about right now. No one. It's always something that you didn't expect, whether it's geopolitical development in a place you didn't think was going to happen, or a natural disaster somewhere, a refinery upset, something that right now you don't have any idea of what's going to happen and where. And that's what makes trading this market, it's made it interesting over the last, 40 years for me anyway. It's always something that you just have no idea of.
Question for you, as you bring up the unexpected, the BP gas bill from years and years and years ago, what did oil prices do around that?
I wish I could just remember that right off I'll have to go back into my, go back.
Maybe we'll talk about that one next week. I was just thinking about it.
We'll talk about that. But that, BP, just speaking about BP, they've really turned it completely around in many aspects of their business, particularly on exploration and production. They just revised upwards their Thunder Horse discovery offshore, which is currently producing. They think they found 1 billion barrels of reserves in the U.S. Gulf. Which is that's huge. Is it a game changer? No, but for that company, they've done a great job since since their accident in the in the Gulf.
Yeah. All right. Well, let's talk about that one. I'm going to take a look at the charts myself. Interested, just thinking about different. You had me thinking there, so I'm going to take a look, and maybe we'll talk about that next week. But Andy Lebow, Commodity Research Group, I really appreciate it. We'll keep an eye on it. Right now, crude oil is trading just under $51. So we're up 2.5%. Big rally to start the year so far. We'll talk more about it later. Thanks, Andy.
Okay. Thank you, Michael.